the window is wide open right now for real estate investment. We should all be getting as much real estate as we possibly can because the window is not going to stay open forever. And, over the years of my career, I could just see that window shutting and shutting. And I'm like, we're going to get our fingers pinched really soon, guys. So let's.
Welcome to the Break Free Real Estate Podcast, your daily guide to financial freedom through real estate. I'm your host, Jocelyn Kaufman, and today I'm here with Mark Updegraff, and I'm super excited to learn about his journey. Mark, how are you doing today?
I'm doing outstanding. Thank you for asking.
Yeah, for sure. So Mark, do you want to kind of just give a brief outline of what your real estate portfolio looks like today? I know you have a company and some of your own properties, just a brief outline of what it looks like.
Yeah, I try not to get focused on unit count. So forever, I've never counted my doors. I would tell you I'm probably around 80 units, somewhere in that vicinity. And, I started from zero when I was still in college getting my master's degree. And that was back in 2008. And I decided that, I wanted to take the plunge, even though, everybody around me told me it was a horrible time to get started in real estate. Little did they know it was the best time to get started in real estate. So I kind of got lucky. And, I entered right then when there was a lot of blood in the streets. And I just saw this huge opportunity. And I told everybody I knew, I was like, the window is wide open right now for real estate investment. We should all be getting as much real estate as we possibly can because the window is not going to stay open forever. And, over the years of my career, I could just see that window shutting and shutting. And I'm like, we're going to get our fingers pinched really soon, guys. So let's keep eking out as much profitable real estate as we can.
That's awesome. I think you're going to be an amazing guest on the show, and I'm excited for you to share your insight with all of our listeners. Do you have like a family life? Do you have a life outside of real estate?
I've got a wife and 3 kids. So that's outside of real estate. But when I started, we had no kids. And, I really used a lot of that time. My wife was supportive and she would let me, invest it in the business and in building the businesses. So I did work a lot of hours, a lot of relentless hours going up into it, just figuring that, I want to set myself up for retirement later so I don't have to work quite as hard as I get older. But I've always had that work ethic. My father still works a lot of hours, even though he's technically in his retirement age. And even when he goes, to his second house now for retirement, he's tinkering there. He's fixing the car, he's scraping and painting, he's always working. So I kind of feel like I'll be similar to that style. Even if I'm not, technically working in real estate, I got to stay busy.
Yeah, I kind of feel like that's a trait among most successful people is they have to be doing something. And so that's why they're successful is because they're willing to put in all this work and effort and they grow their success, right? You just don't stop once you feel like you're set, you just keep going. That's awesome. How old are your kids? Do you have them involved in anything you're doing, or do you kind of just try to keep your family life separate from your real estate?
No, I try to educate them on everything that I'm doing. I've got a 10-year-old, a 7-year-old, and a 2-year-old. So obviously the 2-year-old has no clue what's going on. 7-year-old, she's getting to about that age where I can start to have those conversations. My 10-year-old, if you ask him what's the difference between 1099 and W-2, he'll be able to answer you intelligently. We talk about investing. I'm constantly talking about real estate with him. I'll bring him to houses, to development projects, to construction sites, and just trying to educate him and get him excited about it. He is a young entrepreneur at heart. The only thing he asked Santa for this year was a 3-piece suit and a briefcase. He's got his own little side hustles set up. He was selling Gatorade and popcorn last year. He did really well. And this year he's expanded. He's got a little snow cone machine. So he's going to be selling snow cones with his popcorn and his Gatorade. And, I make him use his money to buy the supplies so he can really understand cash flow and he can understand operational costs and stuff like that. So, yeah, I think, this year will probably be the first year I trust him with a lawnmower. Last year, I supervised him with a lawnmower and my 7-year-old was like running around and I was a little nervous. So I'm still probably a couple years out on the manual labor and painting and stuff like that. But when he's old enough, he'll definitely have the opportunity to earn a little bit of income and jump into the field and do some field work.
That's so awesome. I think that's a trait that is like it's the most important for a child to learn. How to run a business, work ethic, like how to make money. Like, but I think that's so awesome that you're teaching your kids that at such a young age. So good on you. Okay, Mark. So put me in your headspace when you got into real estate. What made you decide to get into real estate? How old were you? What were you currently doing for work? Kind of just lay the groundwork and then we'll dive into it deeper.
Sure. So I think I was in my early 20s, and I had done a lot of different side hustles, kind of like my son's doing over the years. I was a flame worker slash glass blower, and just I did all kinds of crazy stuff to make money. And when I was in college and I was working, I was pretty busy, so I wanted to take what savings I had and I wanted to invest it. So I did some stuff in the stock market and made some money on stocks, but then I also saw the opportunity to lose money in stocks, and I was just like, I didn't really understand it enough to feel confident in what I was doing. I was kind of like a buy and hold stock guy too, kind of like I do real estate, where I'm going to put the money in and then just leave it alone. And it just wasn't doing as much work as I wanted it to do. I thought, I'd see it go up, I'd see it come down, I'd see it go up, and I was like, I want something different that's a little bit more predictable, that I have a little bit more control over, which is why I got turned on to real estate. So I just started consuming as much knowledge about the subject as I could, reading all the different books. And I knew in my mind that real estate was the avenue that I wanted to pursue. And from there, I just liquidated all my stock holdings into cash and then converted that into my first couple real estate investments. My first deal I got into for $7,000 out of pocket, which was awesome. And I didn't have a ton of money because I was so young, and bills for college and all that stuff. But over the next couple of years, I was able to build a portfolio. And I went back through, got my master's degree, and went into industry with a W-2. And having that master's, you get a little bit more money than you would otherwise. And I had built up a portfolio of, well, maybe like a dozen properties or something like that, 15 properties. And, I was really enjoying having that passive income. I was putting it back into the business. And I found out by conversations with older scientists at the place that I worked that I was never going to make a ton of money. The guy that I really resonated with had been there for 20 plus years, and he was only making a little bit more than I was. And he said, that's just what you can expect as a scientist. He's like, if you want to make the big bucks in this industry, you have to go into management and you have to follow that kind of like hobnob program where you just BS your way up into some kind of role where you've got a good title and you're getting more money, which I never really, that didn't resonate with me. I'm a value add kind of guy. So I want to make sure that I'm contributing. And I just felt like the corporate ladder wasn't structured like that. It was more about who you knew than how you performed. So I pivoted and I went into real estate full time when I lost my job, when they had this massive layoff in Rochester. They lost about 2,000 jobs, all in my sector, imaging. And I was forced to either move and find a job in imaging or do something different. And because I had the portfolio and because my wife liked her career, I decided to give real estate a shot. And if you would have asked me then, I would have said, there's no way I would ever be a sales agent. Working with sales agents, I just hated them. I had a disdain towards them. They were always trying to just make me buy whatever house I walked into with absolutely no regard for the fundamentals of the deal. Or it was just like, buy it, buy it, buy it. And so when I told my wife I was thinking of doing this, she just looked at me kind of funny and said, okay, I mean, give it a shot. If it doesn't work out, you're going to have to figure something else out. And I said, that's fine. I'll get my license. I'll at least be able to open the door for myself. The other problem I had was my realtor was more interested in selling $200,000+ houses instead of helping me buy some $50,000 house that, I may or may not want to buy because it's too deferred or the location isn't right. So I thought that I could speed track my ability to open doors, write offers, get contracts accepted. And it was a time in the market where there were no delayed negotiations. So a lot of time early bird could get the worm, right? So I'd see the listing come to the market. I'd run over and look at it real quick. Sometimes I would just write the offer before I even saw it because I had a good understanding of what the market was. And I would get the contract locked up. I would get my attorney approvals. I'd get the other agent to switch it to pending, and, no muss, no fuss. Sure, there was a lot of other people that would have liked to bid on it, but I was quick. I had a reputation in the community as somebody that, when they put their name behind something, they were going to close on it. And that's how I operated. So as I built my brokerage, I taught my realtors the same lessons that I had learned. And that was how to identify good deals. And then, sometimes I would lock up things under contract that I didn't have the ability to close because I'd already deployed all my capital. And so that's where we could bring in investors and say, hey, lucky for you, we're really good at our job, and we have this contract here that you can close if you want to. And then we would let that investor close that deal. And we would typically take the management, if they weren't local or whatever. And that's how I built my companies. I built a brokerage and I built a management company up around helping other people succeed in real estate.
Yeah, that's amazing. It's so crazy how similar our stories are. I mean, I started W-2 job, started to build a portfolio, realized I'm never going to make any money, and I don't want to work for 50 years without any increase. And then going into real estate, trying to be helping myself, right, buy properties, and then helping other people invest in real estate. So that's awesome. I think that, starting small and then realizing that your W-2 job isn't all that it's cracked out to be your whole life. You're like, oh, this is what I'm going to do my entire life. And then you get there and you're like, okay, this is not what I want to do my entire life. And I think most people who become successful in real estate like you have that moment when they're like, I want to kind of control my future and be able to improve my future the harder I work. So that's awesome. All right. So your first deal, or we could do like your second, when you had a W-2 job. I think most of our listeners probably have a W-2 job. They're trying to figure out how to get into that first deal. I'm assuming you did like a house hack where you moved into it, or was it a true investment property?
It was a true investment property. It was a single
Okay.
family, and I term leased it. And the first tenant I got in, it was $925. It leased up in 24 hours or less. I had a ton of people that wanted it, so obviously I underpriced it. When that unit turned over the next year, I jumped it to 1150. Had no problem. Same deal, just leased out immediately. I've never sold that property, and I would tell you I've had less than 2 weeks vacancy ever on the 15 years I've owned it. And really the secret is in your screening of your tenants and getting somebody that's going to move into it, take care of it like they own it, and really stay there for the duration. And they're great people, and it's not like they wouldn't want to buy a house, but this particular individual, he was coming from another market where he purchased a house, and he purchased it for a job, and it was in a very remote location, so very small population. And when he bought it, he didn't know the market. His agent convinced him to buy it for this ridiculous price, and then he could never get out of it. And he ended up having to go through bankruptcy because of the property, and that totally screwed his credit. So he's been a really great tenant for me. And eventually he'll probably buy a house, and when he does, he's definitely going to come and work with me. I've shown him a few properties over the years, and he's still just not quite there financially to be able to pull it off. And it's unfortunate because, as you know, the market has just been going up and up and up and up. And it's just making it harder and harder for someone like him to get into a house that he would actually want to be in.
Oh, wow. So has he been the same tenant this entire time?
No, I probably had 4 or 5 sets of tenants.
Okay.
And, the second tenant that I had there actually is my longest standing tenant, because he was like, Mark, I outgrew this house. We loved it. We like working with you as our landlord. We need a bigger house. I was just closing on like a 2,700 square foot house that had like 7-car garage, and he works on bikes, so he needed a garage. I moved him from the 1125 unit over to the house, and he never left. He was my one and only tenant. And he's been with me, forever.
That's awesome. That's the best, is when you're able to keep the tenant and just, move them up into a house that they really want. So when you decided to buy that house, how'd you find it? How'd you analyze it? Or you could even just go through how you like to analyze a property when you're thinking of buying a new deal. Just very basic, like how did you go about it?
Yeah, for the first one, I probably wasn't that sophisticated. I just looked at like what was it going to cost me, for my mortgage and how much rent did I think I could bring in. I really didn't do any kind of advanced pro forma on it. And as far as location, you're always going to trade off, the cheaper the price, the worse the location typically. So I've always tried to identify areas that I thought had the ability to get better in location fundamentals, as far as some maybe gentrification or some businesses coming in that are going to provide services to help lift some of the values and help clean up some of the deferred properties. But I've always bought in areas that were kind of in a transition period where there was a lot of blight. There's still drug activity and crime, but and I think of it now as a broker. We're kind of following a market where your first time home buyer is your least qualified buyer. They're typically FHA. They're typically not putting much money down for a down deposit, but they want to get into a nice neighborhood. And when you're in a competitive environment, they just can't compete. They can't get into some of these markets. So they've got to find a place that works for them. And that tends to be the next, up and coming place, because they go there, they plant their flag, their friends start visiting them, some service providers come in and start giving them services that they want, and that kind of lifts that neighborhood until it becomes popular and it becomes trendy, and now all of a sudden your first time home buyer can't compete. And so in my marketplace, that cycle is like 3 to 5 years from where your first time home buyer goes in, plants their flag, things get nice, and now they can't get in and they got to go somewhere else. So I've just been chasing that marketplace because on a price per foot basis, there's a pretty big margin from where it trades at currently to where it's going to trade at as it becomes popular, right? So we typically see about, 30% change in value in 3 to 5 years in that market. So that's a good place to buy cash flowing rental, get it leased up. You don't even have to really make it, you don't have to modernize it. You can just operate it as is. It might have an outdated kitchen, an outdated bathroom. You get at least you're probably making 10% cash on cash. You throw a loan on it, you're going to amplify your return. But then the benefit is in that 3 to 5 year period, your values increased, 30%. You go back to the bank, you take your money back out, like the Burr strategy, and you're still able to continue to cash flow it. You haven't put yourself into an area where you're going negative. Now, even with a really super conservative pro forma where you budget for capex and repair and vacancy and all these things, even if your pro forma might be a little bit overly conservative, that's how I tend to operate. I like to look at the performance of the asset at the end of the year to really understand, how my pro forma model works in different locations, even though I'm going to use the same pro forma model on various properties at various locations. It's kind of getting to understand the operational aspect of different locations and being able to factor that into your buy decision. That's really important for new investors. So that's what I would caution them on. Make sure that, whatever pro forma you're using, you understand that that's not necessarily going to be how your asset performs. So buy one, benchmark it, look at the performance, and then see if your assumptions were correct, or if you need to tweak your assumptions, or maybe tweak your location to more match your assumptions.
Yeah, there's so much value and there's so much value in what you just said. I think I work with a lot of investors who think that they need to buy a property in the nicest area, and they're brand new investors. They want to buy in the nicest area because that's where the best people are renting. And I always try to remind them that, like, if you just go one area down, you're going to have the same renters that are paying the same price, and you're going to be paying $200,000 less like for a
Yeah.
duplex. And so that's a very, very valuable insight. And then I also love how you explain that when you analyze your first deal, you're going to learn so much from that deal. So I do the same thing. I mean, I go back on a monthly basis, and then at the end of every year, I figure out, all my expenses for that property and see what I want to adjust when searching for that next property. And I think a lot of new investors are trying to perfect that analyzation process from the start when it's something that you're not going to ever really do perfectly. Like you're going to always be making adjustments and growing and learning from experiences. And so just be conservative always with your numbers and figure out how much money that property is going to make every month conservatively, and then adjust it for your next property down the line. Great insight, Mark. Thank you so much. We will now end with just a few questions. So first question, what has been your biggest mistake in real estate?
That's a good question. I don't like to admit any mistakes.
I know it's hard. Real estate's hard to make like huge mistakes, but sometimes there's like one or two that we could learn from.
Yeah, no, I make lots of mistakes. I'd say, being a young person, I trusted this narrative that the union gave me that they were going to be able to help me scale my business, and I should have never signed up with the union. So take it for what it's worth. I'm totally anti anything to do with the union after that experience.
Awesome. So is that like with your brokerage business? Is that what you're talking about?
It was actually with my general contracting business, but that was probably the biggest mistake of my life, was trusting those guys to give me some kind of scalability on it was a sheet metal union. So on the HVAC side of things.
Okay. All right. Well, everyone don't get hooked up with the union. Do you have any mistakes that have to do with like real estate? Maybe a bad tenant or a house that you wish you
I
didn't
would,
sell or buy?
yeah,
Or
sure. I would tell people that are getting started in real estate, like whatever you think something's going to cost to renovate, double it and then double it if you're new. It's going to cost a lot more than you think it's going to be. So my underwriting early on, I didn't have enough of a margin for some of these repairs and maintenance that were going to go into a property. I don't regret making the decision, but I do know that, if you're going to buy something, you're going to hold it for 30 years, you're going to be fine. But if you're thinking that your exit's going to be within maybe 5 years, you really do need to pay attention to the construction side of things, because you can eat up a lot of the money that you thought you're going to be making as a profit in repairs and just getting a value add property into service. So when I started my labor, I wouldn't really think about how long something would take me. I'd be like, oh, I can paint this room, or I can do this, or I could do that. Put a value behind all those things. Like, see what a painter would charge you to do it. See what the real retail value of all those services are. And, there's going to be differences in contractors as well. When you're operating in the space as a first time investor, a lot of guys that advertise are kind of fly by night. So you get what you pay for. They might run off and not complete the job, even though you got these low bids. So I'd caution you on taking low bids and putting a lot of weight in them. Maybe get some bids from some reputable companies, knowing that you should be able to find a smaller company that'll do it more effectively or cheaply, but using that in your underwriting as kind of like a worst case scenario. I hire the pros. I know it's getting done right. If there's something wrong, they're going to honor it. So that's been one of the biggest learning things that I've developed over the years, is just figuring out how much things are going to cost. Because in real estate, there's a million different components to a house, and you need to know a lot of different pricing to be able to figure out how much it's going to cost to get something into service, especially if it's a more value add, dilapidated type property.
yeah, that's great advice. I think a lot of times, I run into that where I'm like, oh shoot, that costed like double what I was thinking it was gonna to renovate, and and learning to adjust. But that's great advice. Just double it and then double it from the start, and make sure that you have the savings put aside to fix up a property if you're buying something that is a little bit distressed. What does your due diligence process look like? Do you have an inspector go in? Do you have a contractor go in? Do you just go through the property?
Yep, I do it myself. I'd encourage investors to do it the same way. The first time I bought a house, I had a home inspector, and going through with the home inspector, I realized that he wasn't doing anything that I couldn't do myself. So I've done it myself since then. Obviously I've educated myself on a lot of the different components. We can't see behind walls and we can't see in plumbing. And, it'll depend on your marketplace. Like if you can get an inspection, sure, get an inspection if it's going to make you feel better. Personally, I'm not going to get one because it's a waste of money for me. I'm going to be able to see what I need to see and make a decision. I'm going to be writing more competitive offers without an inspection. So if you're in a competitive market, I mean, you can't get an inspection. So if you want one, now you've got to have your realtor work with the seller and say, hey, we're going to write a non-contingent offer, but I want to bring an inspector through before the offers are due and take up 2 hours of the schedule to bring this inspector through. Sometimes they'll let you do it. Sometimes they won't. So I think getting a real good handle on your ability to identify, what type of roof is it? What's the age of the roof? How many layers? Are the windows original? When were they put in? Are there any fogged windows? So there's just looking for all those different things, taking mental notes. As you get better, you'll understand. And as you see more properties, you'll be able to have like a quote average house. Like, so I'll say, oh, it's a rental and it's in average condition, or it's in below average condition, or it's in better than average condition. And what I tell people that are starting out is, I like to look for what I call the little old lady house. And it's a house that's tend to be in the same family, could be multi-generational or just for a really long time, think 40 years. And the benefit of this house is that it hasn't had all these different family turnovers. You think every time a family moves in and moves out, they're going to hit some moldings and they're going to have a lot of kids, right? So if you've got that 40-year span with 4 different families raising kids, now you've had, 15 kids raised in the house instead of 3. So the little old lady house, it's typically maybe the husband's passed away, it's a widow, and she's done the roof, she's done the siding, she's done the windows, she did the furnace. What didn't she do? She left the shag carpet because she kept up on it. It still is in good condition. It doesn't stink. It looks nice. It's just super, super outdated. Same thing with her kitchen and her bathroom. She's got the pink tub, the pink toilet. She's got the 1960s vintage kitchen, and that asset is functional. And you're going to get a lot of value out of it because your major ticket items have already been done for you. And she's hired reputable people because, she doesn't know anything about roofing. So she's going to get a very reputable roofer come over and do it. And she's not trying to skimp and save money. She's lived in it for 40 years. She wants to protect her investment. Those are my favorite houses to find. So we do the pro forma, we, identify our properties that we want to go look at. And then when we're in the field, we're looking for those value add properties that have got some of those major ticket things already done from a CapEx perspective.
Awesome. Yeah, I think that's great advice. I do the same. I do my own inspections. I have a construction company. And so and I've fixed up so many houses and have been around it so long that I'm able to just go through and inspect it myself. I do think it's for someone new, you probably should have a contractor or an inspector go through, but walk through with them. Like, don't just go for the meeting at the end, walk through with them and try to learn what they're doing, especially if you have no knowledge in the field. And I love the little old lady house. I've never thought of it that way. I love cosmetic, like houses that you just have to cosmetically update because they're outdated. And usually they've been taken care of because someone's lived there their whole life pretty much and just have taken care of the house. But I love that analogy of just the little lady house. That is amazing. All right. Next question. What is one thing you wish you knew beforehand?
I wish I would have, so I kind of hunkered down. I learned a lot in the beginning. I was on sites like Bigger Pockets, asking tons of questions. And then once I got some experience, I would answer some questions. And then I just got super focused on operating and building my companies and, mentoring people. And I forgot to continue to educate myself. I would still read books and stuff like that, but I didn't seek out like masterminds and conferences and all that stuff, which I've done recently. And now I'm like, I should have been doing this, I should have never stopped. So if I could rewind time, I had a huge education period in real estate at the beginning, and then I just operated and I learned through the School of Hard Knocks. I learned through doing, which is good. All those lessons are really good to learn, but I wish I would have put my head up and looked around and been like, okay, I could go to this conference and meet some people that are in the industry, or I could join this mastermind and network with other people that are doing some pretty wild things that I didn't even think about doing. And so I would tell people that make sure that you just continue to educate yourself. Even if you think you've got a good model that works, keep educating yourself anyway.
I love that. I think, I mean, I kind of found myself in that position too. Like you almost get so busy in your investing and so like complacent that you forget there's so much to learn. Like you're never going to learn everything that there is to do with real estate. There's always going to be more to learn. And so I'm kind of to that, oh, I need to go to this conference and I need to go do this and I need to really put myself out there to learn more. So that's great advice. Last question. What's your favorite real estate book? Do you have one?
I like to give The Fountainhead as a recommendation because all the other books have been said a billion times on podcasts. The Fountainhead isn't a like real estate education book on how to buy and invest in real estate, but it's a really good book. And the main character is an architect, and his whole premise is like not compromising and just building the most outstanding buildings ever created. There's a number of characters that it goes through, and each character in the book is unique, and you can find a piece of them within you. So I really think it's a great read, especially for an entrepreneur that loves real estate.
That's awesome. I will put that in the show notes if you guys want to link to it. And then one final question, Mark, how can people find and connect with you?
Sure. I am at raisecapital.com, spelled RAZE. So you're going to stack up all this cash and then just knock it over, deploy it into real assets. Raise Capital.
Awesome. Well, it's been great having you on. You're very knowledgeable, and I think you were able to give so much insight and valuable information throughout this episode. So thank you, Mark. That's it for today. For more daily investing tips and real estate secrets, don't forget to visit breakfreerealestate.com and make sure to like, subscribe, and share our podcast. We will see you tomorrow.